Happy Tuesday, everybody. Hello from beautiful Bali. I will share some footage with you on our trip here to Bali for the SUI event. Anyway, I'm so sorry I missed you guys yesterday. We were traveling and settling in, and it was just extremely chaotic. Just like the crypto market feels right now. Bitcoin is slipping, we know, altcoins are struggling. And if you've been staring at your portfolio and feeling uneasy, you're not alone, okay? And that's what we're gonna get into in today's video. I'm gonna break it all down for you. But here's the most important thing I need you to hear right now. And that is that while prices look rough, okay, on the superficial level, if you just look at the charts and listen to what's on the media, the real story is moving in a very different direction. And it's very, very interesting. The Fed just made a subtle but critical shift, one that could open the door, okay, to rate cuts sooner than anyone expected. So this is actually very exciting. And right as this happened, one single whale, okay, one extraordinarily rich individual or investor dumped billions of Bitcoin, sparking panic while quietly rotating that value into Ethereum. And at the same time, treasuries and institutions are scooping up ETH at a pace we have never seen before. This is completely unprecedented. And they are locking up supply and squeezing the market. I have said it before in my channel, but the institutions are now first movers, they're the whales, and we, the rest of us in crypto, whether you've been here for some time or not, we are now retail. So while everyone is distracted, Solana is starting to heat up, positioning itself as the next major rotation play. And I believe so is SUI. I have so much to update you guys on what SUI is doing, but that's gonna be in my next video, okay? So this is what we're gonna get into in today's video. I'm gonna break it all down. We're talking about the macro shift, the whale moves, the treasury accumulation, and the rotation that could define the next stage of this bull market. Once you see the full picture, you'll understand why this moment could be the turning point that sets up the next massive wave up in the market. So buckle in and let's dive in, guys. All right, starting from the top, as we always do, because we know that the macro market and conditions, much like the weather, they affect the crypto market. The crypto market is still pegged, it still reacts to the macro market. So we know that last Friday, Jerome Powell took the stage at Jackson Hole and he quietly shifted the entire macro narrative. He never said the words rate cuts, but he didn't have to. The real clue came in one strategic line and thing that he said. And that is the balance of risk appears to be shifting. That's all you need to know, okay? The Fed is no longer laser focused on inflation. Its eyes are now on the jobs data and what it tells the Fed. Powell even admitted that the labor market is acting strangely, he said. Both hiring demand and worker supply are cooling at the same time. And when that happens, it usually leads to layoffs. Layoffs tend to snowball quickly once they start too. And on top of that, Powell effectively tore up the old playbook, okay? Things have changed. It's not about inflation data anymore. The Fed no longer needs to wait until inflation is back at 2% before acting. Mind you, no one really knows why it ever had to be at 2% anyway. So this is good. So they're basically creating flexibility, okay? A flexible dynamic and criteria required for them to pull the trigger on lowering rates. And Wall Street did not miss the signal. The futures market immediately priced in 2 cuts before the end of the year. And globally, central banks are already ahead of the curve. 15 of them slashed rates in May alone. Powell knows the Fed is playing catch up, but the real weight pressing on policy is not just jobs or inflation either. It's the debt. America's interest bill just crossed over 1.2 trillion over this last year. And if yields stay high, that number could balloon to 14 trillion by 2026. So to stop the bleeding, average borrowing costs need to fall below 3.1%. And right now, the 5-year sits near 3.8%. The math only works one way. Rates have to come down. Oh, well, the political backdrop just got even crazier. It got so much more chaotic. Trump just fired Fed Governor Lee Cook, or should we call her Crook? And he did it on the basis of fraud allegations, a move that shakes the Fed's independence, frankly, its credibility, and shakes the very ground it stands on. And this is almost certain to spark legal battles. This is huge. Honestly, we know Trump is a master negotiator and he goes for the jugular. And it appears that's what he did here. He's trying to dismantle the Federal Reserve, is what I see, okay? This is not coming from any other source. So this is really huge, what just happened. And markets instantly reacted. Yields spiked, gold jumped, and investors started worrying about political interference in monetary policy. And here's the kicker. Powell's term already ends in May of 2026. And Trump has already said he'll name a new Fed chair soon. And it will very likely be someone way more aggressive about cutting rates. So all signs right now are pointing in the same direction. It looks like the stars are very much so aligning for lower rates, which will be huge for markets. Next, let's pivot a little bit and let's focus on this Bitcoin dump, okay? And the ETH rotation happening of this value moving into the Ethereum ecosystem. So the question is, why did Bitcoin tank right after what looked like the most bullish Fed pivot in years? The answer comes down to one whale, this extraordinarily wealthy holder, investor. We don't know who he is. But the point is, in one single move, okay, this person dumped over 24,000 Bitcoin, worth about $2.7 billion equivalent. And he dumped it straight into the market. The sell pressure was so massive, it sparked a $4,000 plunge within minutes and wiped out more than $300 million in long positions in just 1 hour of people bullish on Bitcoin's price going up. They all got wiped out. And here is where it gets even wilder. On-chain data shows the wallet behind this is an old school holder, okay, so someone very knowledgeable, we assume, that first received 100,784 Bitcoin roughly 7 years ago. Back then, those Bitcoins were worth $642 million. Today, the stash is valued at over $11 billion. So in just 5 days, this same entity sent 2,769 Bitcoin, around $2.59 billion, to Hyperliquid to offload. And at the same time, they rotated into Ethereum, buying 472,920 Ethereum, worth $2.22 billion, and opening a 135,265 ETH long position, which is a $577 million leverage bet on Ethereum going higher. So what does this OG holder of Bitcoin know that maybe we should too? Very interesting, huh? The market impact was immediate, of course, because it was unprecedented. No one saw it coming, which is basically what could happen at any time. This is why you always have to be ready, okay? And this is why I always say you never invest in crypto what you are not willing to completely lose and not cry about. It's your gambling money. Bitcoin's weekly candle ended up closing ugly at 112,185. And apparently traders are now watching for the $108,000 marker as the key support level. Now, mind you, this could happen maybe yes, maybe no. We have to remember that the simple fact traders are watching for this level does not mean it's going to happen. Traders follow patterns, and so that's how they reached this calculation. Now, this calculation does not factor in macro conditions or events that could affect the market. Okay, this is simply based off of technical analysis. So it's very important, to remember how these figures are calculated. And I'm simply sharing it with you so you're aware. Okay, it doesn't mean that's what I think is going to happen either. Anyway, the point is, this was one of the largest moves we've seen from a single entity in many years. And the takeaway is very clear. A whale worth billions of dollars is unloading Bitcoin and is moving that value into Ethereum. That's the key takeaway here. So the question is this whale, this knowledgeable OG that has been in crypto for a very long time and knows Bitcoin is precious, right? Irreplaceable. It's the number one. What does he know? And is he front running the market? Well, we'll find out very soon. Let's keep going. Before we do though, let's pause for a second, just put a pin in it. And let's talk about the 4-year cycle and whether it's even a thing anymore. The recent price action has definitely shaken many people to the core and has sparked this debate going on in the market. Maybe you've been asking yourself this on where we really are in this cycle. Okay, are we at the top? Are we nearing the top? What's happening? Bitcoin's 4-year rhythm has long looked like clockwork, okay? 2013, 2017, 2021, each peaked, followed by the same sequence, okay? The events that have triggered the market have been halving, supply shock, and then a blow off top about 12 to 18 months later. If that pattern holds, the next peak should land sometime in Q4 of this year. This cycle, however, is playing out very differently. Retail is not in the driver's seat anymore. Institutions are. ETFs, pensions, and corporate treasuries dominate today's market, and they move slower. They accumulate steadily, and they do not panic when Bitcoin drops 15%. So these factors change the entire playing field, the rhythm Bitcoin was following before. And at the same time, Bitcoin still has not broken out relative to hard money. When priced in gold, it's still trading below the last cycle high. So there's no bubble signal yet. Then there's the Fed angle. Powell's term ends in May of this next year, and Trump has already said he'll announce a new Fed chair fairly soon. If that announcement comes in late this year or early next year, markets could spend months front-running it. And we know Trump is definitely a teaser, and he wants to stimulate the market. So if you think about it, why would he not announce it sooner than later? So if this happens, we may very well see the whole scenario between Yellen to Powell during that whole transition happen again. And history suggests the real volatility, okay, often happens after the new chair is in place. So this actually shifts the potential timing for a new market top closer to mid-2026, not the spring of this year. All while liquidity is still flowing. And the stablecoin market cap, which we know is just crypto's version of the M2 money supply, is climbing. And tops usually follow 3 to 6 months after stablecoin growth stalls. And right now, it hasn't. Capital is still flowing in, and dry powder is still building. The main risk to this extended thesis is digital asset treasuries. Players like Strategy, like SharpLink, and Ethereum are huge, huge buyers. If any of them flip from accumulating to liquidating, the market could turn sharply. Now, I don't believe Strategy will, because if you followed any of Michael Saylor's content or interviews, you know, he is obsessed with Bitcoin. He says he's going to buy Bitcoin at the top forever. So I don't think this would be coming from Strategy, but it could from the others. Thankfully, the broader macro market condition still looks very supportive. Inflation has not reaccelerated, and the Fed is opening the door to cuts. Risk assets have the wind at their back. That does not, however, this does not guarantee new highs tomorrow, but it does suggest crypto may have a longer runway than it has in any past cycle. That said, if institutions really are stretching this cycle, okay, Ethereum is where the pressure shows up first. And a new wave of buyers are locking up massive amounts of Ethereum. And it's literally changing how the asset trades. Ethereum, for instance, just filed for a $10 billion stock offering with the goal of loading up even more ETH onto its balance sheet. And Bitmine added 190,500 ETH last week alone, boosting their stash by 2.2 billion to a total of 1.71 million ETH. And they didn't stop there. Just days later, they scooped up another 4,871 ETH, worth over $21 million, continuing their relentless accumulation. So this now makes them the largest Ethereum treasury worldwide and the second biggest crypto treasury overall. SharpLink Gaming is also funneling ETH into staking contracts, locking up supply while securing yield for the network. Meanwhile, Ethereum's base layer is running hot. Layer 1 transactions and active addresses just hit new all-time highs, while gas fees are still near historic lows. So that means activity is climbing. Capital can now move cheaply, and it's never been easier for large players to build positions. And here's a twist. Even with ETH's bleeding, okay? ETH keeps ripping. Last week, for instance, Ethereum's ETF saw record outflows of 578 million. Normally, this kind of redemption wave could crush the price. Instead, however, I hope that wasn't a double negative, ETH pushed through $4,900 to hit a new all-time high. The marginal buyer has shifted. It's no longer just funds shuffling exposure through ETFs. It's corporate treasuries, it's whales, it's long-term holders quietly taking ETH off the market. You can see it everywhere. Treasury-linked stocks are trending, and on-chain data shows whales rotating billions of Bitcoin into Ethereum. ETH is becoming the asset institutions want on their books. And that shift is driving a structural supply squeeze unlike anything the market has ever seen before. And it doesn't stop there either. Sharplink is proving how treasuries can take that ETH accumulation and weaponize it through the equity markets. Right after locking ETH into staking, the company announced a $1.5 billion stock buyback. The move raised questions. Why spend billions buying back shares right after raising capital to buy ETH? It all comes down to NAV, or net asset value per share. NAV is simply the company's asset minus its debt, divided into shares outstanding. When Sharplink trades above NAV, it can issue new stock at premium and use the proceeds to accumulate ETH. When it trades below NAV, it flips the playbook, buying back shares to shrink the float and boost ETH per share. The buybacks can be funded with cash, capital raised earlier, or even loans backed by ETH without selling a single token. The effect is simple. Fewer shares, more ETH exposure per share, and a market that reprices higher. In short, Sharplink is using the equity markets to create synthetic ETH leverage. It's flexible, it adapts to conditions, and it steadily builds supply pressure without touching their ETH holdings. So essentially, it's the same framework, MicroStrategy at the time, now just strategy, used for Bitcoin, but with Ethereum's staking yield, programmability, and central role in DeFi. The playbook may even be stronger here. But now let's talk about Solana. Because while Ethereum has been in the spotlight, Solana has been quietly building momentum. Right after Ethereum hit new highs, the Sol BTC chart printed a clean W bottom on the weekly. Sol ETH also bounced off monthly support, hinting that Solana could start outperforming if Ethereum consolidates. The fundamentals support it. Solana ranks top 2 in fee revenue, developer activity, daily users, and transaction volume. All delivered with fast finality, a unified state machine, and a user experience that keeps builders on chain. It's the only chain executing across product, speed, and UX at the same time. Although there's also SUI, but like I said, we'll get into that tomorrow. The rotation setup is classic here. ETH has run hot for months, but when traders rotate, Solana is usually the next stop. You can already see it in trading volume and in the Sol BTC chart, and institutions are taking notice. Galaxy, Jump, and Multicoin are reportedly raising $1 billion for a Solana-focused treasury. And Sharps Technology also just announced a $400 million private placement, including a 50 million SOL purchase at a discount, the largest Solana treasury on record. And Pantera Capital is aiming even bigger, seeking up to $1.25 billion to convert a NASDAQ-listed company into Solana Co., dedicated solely to accumulating Solana. With this kind of firepower, Solana is positioning itself as one of the top platforms to capture the next rotation. So now we know what's really going on with crypto and the crypto markets right now. First, Powell and the Fed have shifted gears apparently. The focus is moving from inflation to jobs, and the stage is being set for rate cuts. Secondly, whales are reshaping the market, unloading billions in Bitcoin while rotating heavily into Ethereum. fueling a treasury-driven supply squeeze. And lastly, we see Solana is waking up. The charts, the fundamentals, and the institutional money all point to it being the next major rotation play. So here's how I see it. The fundamentals across crypto are strong, and every dip is another chance to scoop up the best projects at a discount. With Solana heating up, make sure you check out this video where I share 3 of the top projects in the Solana ecosystem. Anyway, guys, that's a wrap for today's video. I love you guys so much. And if you gained any value from this video, I just ask you like the video and share it with a friend or family member so everyone can learn and everyone can be successful this bull run. And then of course, make sure you have the notification bell on so you know when I drop the video. Thanks for watching, and I'll catch you guys in my video tomorrow.